Welcome back to the Pro Ticker Podcast, your Tuesday morning edition covering major financial magazine headlines, everyone.
Today, we're taking a comprehensive look at the global financial landscape and the key market movers.
Right, we're pulling insights from a stack of recent reports. Think CNBC, Reuters, Bloomberg,
Yeah,
the big names.
exactly. Our mission, as always, is to cut through all that noise, find the critical insights, maybe some surprising
And
connections.
explain why it actually
Right.
matters to you. We want to give you that shortcut to being, well, truly well-informed.
So let's get right into it.
Okay, kicking off our global tour then. Asia-Pacific markets looked largely positive today. What's the headline story there?
That's right. Most key indices did close higher. Reports from, say, CNBC's live updates show Hong Kong's Hang Seng added a solid 1.6%.
Okay.
Japan's Nikkei out 25, up about 0.5%. South Korea's Kospi up 0.4%.
Australia and India, too?
Yep. Australia's S&P SX 200 finished 0.7% higher, and India's Nifty 50 moved up just under 0.5% as well. So mostly green across the board.
But not everywhere, right? Mainland China, I saw that CSI 300 was basically flat.
Right, flat. And the Shanghai Composite actually dipped slightly, down about 0.4%.
So what's really driving that sort of mixed picture out of China?
Indeed, that's where the nuance comes in. A key driver was China's second quarter GDP growth. Now, it expanded 5.2%.
Which beat forecasts slightly.
Just slightly, yeah. Economists polled by Reuters were looking for 5.1%. But, and this is the real insight here, it was weaker than the 5.4% growth they had in the first quarter.
So a slowdown.
Exactly. And that slowdown is fueling these
So the headline number looks okay-ish, but underneath.
underneath the pressures are significant. So for you, the global investor, this signals Beijing might double down on stimulus, but it also points to these underlying weaknesses that could limit long-term growth.
Makes market plays more about policy bets than fundamentals, maybe.
You got it. It's about reading the policy tea leaves right now.
Okay, fascinating distinction there. Headline versus reality. Let's shift from China. Japan's bond markets saw something pretty notable today.
Yeah, quite significant. Japan's government bond yields saw some big jumps. This is ahead of their upper house elections on July 20th.
Okay, give us some context. What kind of rises are we talking?
Well, the 30-year government bond yield rose 14.5 basis points. That's 0.145%. Hit a record high of 3.191%.
Record high, wow. And the 10-year?
The 10-year JGBs, Japanese government bonds, they were up nearly 2 basis points to 1.594%. That's their highest level since 2008.
Okay, those are major shifts, especially for long bonds. What's behind it? Is it just election jitters or something deeper?
It's definitely tied to the politics, but it reflects these deeper fiscal concerns. As CNBC reported, worries are mounting about fiscal spending.
How so?
You've got a sizable number of politicians openly talking about consumption tax cuts.
Even though the prime minister is against it if it means more debt.
Exactly, despite Prime Minister Ishiba's stance. So it creates real uncertainty about fiscal discipline. Japan already has one of the world's highest public debt-to-GDP ratios.
Right.
And tax revenues just don't cover government expenses. So bond market participants, they're demanding more yield to hold Japanese debt.
So the market's pushing back.
Precisely. As Amir Anvarzada, a Japan equity strategist, put it quite colorfully to CNBC, the bond vigilantes are out.
Bond vigilantes. I like that image. For our listeners, what exactly does that mean? Is there history here?
It's a great term, isn't it? Bond vigilantes basically refers to bond investors who, by selling off government bonds, effectively pressure a government
Pressure them how?
to adopt more sound fiscal policies or, like we're seeing in Japan, force them to pay much higher interest rates. They act as a kind of market check on government spending.
And historically.
You often see this in periods of high government debt and, perceived fiscal irresponsibility. The market loses confidence, demands a premium. It's the market saying, prove you can manage your finances or pay up.
So a direct challenge for whoever wins the election in Japan.
Absolutely. Either rein in spending expectations or face significantly higher debt servicing costs, which can spiral quickly.
Okay, let's hop over to Europe. Similar themes, maybe? The UK Finance Minister, Rachel Reeves, giving her Mansion House speech today.
Yeah, there are parallels. The UK's government debt is nearly 100% of GDP. Economy's slowing down, so investors are keenly waiting for her plan.
What are they hoping to hear? Growth plans? Budget fixes?
Both. How to inject growth and how to address what some are calling a potential black hole in the budget. A big focus is expected on overhauling the pensions regime
Pensions, why is that so critical now?
because the costs of the state pension are just soaring. It's projected to reach 7.7% of GDP by the early 2070s.
Wow. Why such a big jump?
It's mostly down to an aging population and this thing called the triple lock commitment.
The triple lock sounds secure, but maybe expensive. Can you break that down quickly?
Sure. The triple lock is a UK government promise. State pensions rise each year by whichever is highest.
Yeah.
Inflation, average earnings growth, or 2.5%.
Okay, so it guarantees a solid rise.
Exactly. Designed to protect pensioners' incomes. But with rising inflation and an aging population, it puts immense pressure on the budget.
Because the cost is locked in to rise, even if the working population shrinks.
Precisely. It creates this huge structural challenge.
Mhm.
How do you balance the books and stimulate growth?
So looking at this whole global fiscal dance,
Yep.
China's deflation worries, Japan's bond market reaction, the UK's pension issue,
Yeah.
what's the takeaway for, someone listening at home?
It really highlights this incredibly intricate balance that governments everywhere are trying to strike, supporting growth versus managing massive debt.
And politics plays a huge role.
A direct role. Elections, policy speeches, they can sway market sentiment, investor confidence worldwide almost instantly.
For your own portfolio.
Keep a sharp eye on government spending plans, central bank signals. Maybe look for companies resilient to higher interest rates or, defensive sectors. Don't just rely on the broad market going up.
It's a reminder that macroeconomics isn't just theory.
Not at all. It directly impacts your wallet, your investments.
Okay, let's pivot. Tech world. Big story today. NVIDIA. AI chips. China. This feels like a pretty significant reversal.
This is where it gets really interesting. Yes, reports from both CNBC and Bloomberg confirming NVIDIA intends to resume selling its H20 AI chips to China soon.
Soon. And this is after the U.S. government gave assurances about licenses.
Exactly. Following assurances, licenses will be granted. This is a dramatic U-turn from the Trump administration's earlier stance.
Which had basically halted those sales, right? Aiming to limit China's AI progress.
Correct. No H20 sales to China without a U.S. permit. That was the policy.
So how did the markets react to this sudden shift? Must have caused some waves.
Oh, absolutely. Chinese tech stocks rallied significantly on the news. The Hang Seng Tech Index surged over 2% in its last half hour of trading, according to CNBC.
A big win for NVIDIA then.
Huge win. CEO Jensen Huang had been lobbying hard against those controls. He argued they hurt American tech leadership.
And cost NVIDIA market share in China.
Nearly cut it in half, according to Bloomberg. So yeah, this reaffirms NVIDIA's absolutely critical role in global AI infrastructure. I mean, they just hit $4 trillion market value. First company ever.
Incredible. And maybe signals a shift in U.S. strategy towards China, balancing security and
It
economics.
certainly suggests that, yeah, a potential recalibration.
Okay, speaking of the Trump administration, new tariff threats are making headlines again, but a different angle this time, kind of novel.
That's right. President Trump has threatened secondary tariffs, about 100%,
Ahu.
on countries buying Russia's exports. Think China, India, Turkey. If the Kremlin doesn't reach a deal to end the invasion of Ukraine in 50 days.
Wow. Using tariffs as a weapon for peace, as some are framing it.
That's the framing, yeah. CNBC's Daily Open used that phrase. This renewed geopolitical tension also reignited a rally in gold.
Safe haven buying.
Yep. Spot gold rising for a second session, topped a 3-week high. Investors piling in.
Interesting, though, Bloomberg noted oil prices actually dipped.
They did. Traders seem skeptical that this 50-day window would immediately block Russia's energy exports, so a bit of doubt there.
Okay, tariffs as a weapon for peace. Provocative. But domestically, the worry is these same tariffs could trigger inflation. What's the latest there from Reuters, CNBC?
Well, the U.S. is expected to report today on June consumer prices. The expectation is that rising costs for imported goods lifted overall prices.
What are the forecasts?
Economists polled by Reuters see the Consumer Price Index, the CPI, showing a 0.3% monthly increase, annual headline rate of 2.7%, and core inflation.
That's excluding food and energy.
Right, core inflation at 3%. And Chris Hodge at Natixis CIB Americas told CNBC that June is really the first month where these tariffs are, quote, really going to start to bite in a very noticeable way.
So if these inflation numbers do come in hot, what does that mean for the Fed? For interest rates?
Yeah.
Still hoping for a cut in September.
According to Reuters, Fed Chair Jerome Powell has basically said this summer is key to seeing if tariffs are genuinely boosting inflation.
So higher numbers mean?
Higher numbers likely keep the Fed's benchmark rate right where it is in that 4.25 to 4.5% range. Makes a rate cut less likely soon, definitely puts September hopes in doubt for many investors.
Which sectors are most sensitive?
Keep an eye on things like household furnishings, recreational goods, cars, apparel. They're very sensitive to tariffs, so watch for price acceleration there.
But the White House has this counter theory. Something about patriotism buying.
Yeah, mentioned in CNBC's Daily Open. The theory is that Americans buying domestically out of patriotism might somehow suppress inflation, stop prices rising.
That's quite a statement. From your perspective, is there much evidence for that? Or is it more, maybe, hopeful political spin?
That's a crucial question. Historically, consumer behavior is complex. National sentiment can play a role, sure, in some decisions.
But enough to offset tariffs across the board.
The idea it could broadly counteract the economic force of tariffs on inflation. Well, it's highly debated among economists. Tariffs are basically a tax on imports.
And costs usually get passed on.
Typically, yes, passed on to consumers. So, while the White House might hope for a Buy American surge, most economists look at supply-demand cost structures, not really banking on patriotism buying to offset import costs.
So watch the theory, but maybe remain skeptical.
Skepticism among market watchers is definitely high on that one.
Okay, so connecting these threads again. The geopolitics of tariffs, domestic policy, the inflation data, consumer behavior. What does this mean for you, trying to navigate all this?
It just highlights these really complex, sometimes contradictory forces, all playing out, all impacting your purchasing power, your investment opportunities.
Decisions in Washington or Moscow affecting prices at your local store.
Literally. Understanding these links helps you anticipate shifts, protect your finances, whether you're buying a car or just managing the household budget. It reminds you how intertwined this global economy really is.
Okay, let's shift gears. Corporate innovations, market dynamics. First, fintech. This saw a bit of a rebound.
Indeed. Block and PayPal both climbed on Monday. They dropped last week.
What caused the rebound?
Analysts basically downplayed that threat from JP Morgan Chase. You know, the plan to charge data aggregators for access to customer info.
Right. It seemed like a big deal initially.
It did, but analysts at Evercore, Morgan Stanley, they called the potential impact negligible, especially for the big fintechs.
Negligible, really?
Yeah, they suggested the main effect might just be a tiny bump in one-time account setup costs, maybe 50 or 60 cents per account.
Yeah.
So the fear was overblown, market adjusted.
Got it. Okay, Jim Cramer's been talking about M&A heating up. Deal-making on Wall Street. What's he seeing?
Cramer says deal-making is starting to heat up, yeah. He described it as being in the ripple stage, before the bigger waves hit.
Suggesting now is a good time to buy.
That's his take. He pointed to recent deals. Ferrero buying WK Kellogg for $3.1 billion, Waters buying a Becton Dickinson unit, Huntington Bank shares buying Veritex.
So activity is picking up.
Seems so. He also suggested the Trump administration's FTC might be more friendly to M&A, which could be a factor too. It shows growing corporate confidence.
Interesting. Okay, two distinct Tesla stories today. First, India. Their big debut. What's the play there?
Right. Tesla finally launched in India the Model Y, priced around $70,000 US.
$70,000. That's way higher than the U.S. price.
It is. Significantly higher than the, $45,000 here? As CNBC reported, it's largely due to India's steep 70% EV import tariff, plus a 30% luxury tax.
Ouch. So not aiming for the mass market yet.
No, experts see this as Tesla just testing the waters. Not a full commitment to local manufacturing. Not yet, anyway. It positions the Model Y firmly in the premium segment, competing with BMW, not, everyday cars.
Gauging demand before a bigger investment makes sense. And the other Tesla headline, a high-stakes trial.
Yes, jury selection began in Miami. First fatal crash lawsuit involving Autopilot to go to trial.
And Elon Musk's persona is a factor?
Apparently so. CNBC reported his presence, even indirectly, loomed large. Several potential jurors said they'd struggle to be impartial because of their views on him.
What's the core allegation?
Plaintiffs allege Autopilot was defective, unsafe. They're citing Musk's own past statements about superhuman sensors, cars being safer than a human.
In Tesla's defense.
Tesla asserts the crash had nothing to do with Autopilot. They blame a distracted driver, saying he was on his phone, overriding the system.
Huge implications for autonomous driving tech, legally.
Absolutely. Setting precedents for manufacturer responsibility, driver responsibility. It's a landmark case.
Okay, Shifting to broader AI and cloud investments, Oracle made a pretty big splash.
They certainly did. Reuters reported Oracle plans to invest a whopping $3 billion over 5 years
$3 billion. Where?
in AI and cloud infrastructure in Germany and the Netherlands to meet demand. $2 billion for Germany, $1 billion for the Netherlands.
Oracle stock has been doing well on AI demand, right?
Yeah, shares are up about 38% this year, driven by strong demand for their AI cloud services. They're also part of that Stargate joint venture with OpenAI.
And separately, more AI investment news. In the U.S.
Yes, President Trump is set to join tech and energy execs in Pittsburgh today, announcing some $70 billion in AI and energy investments in Pennsylvania, also discussing streamlining permits for data centers.
$70 billion. Wow. Just highlights the global race in AI infrastructure.
Absolutely. Immense capital pouring in everywhere.
Okay. We also saw some interesting market shuffles.
Yeah.
And some crypto curiosities. My favorite part.
Okay, the market shuffle first. The trade desk stock jumped 14% today.
Why the jump?
It's set to replace Ansys in the S&P 500 index effective Friday. This happens because Synopsys is acquiring Ansys.
Ah, index rebalancing.
Exactly. It's a classic phenomenon. Fund managers who track the S&P 500 have to buy the trade desk, sell Ansys, creates that immediate price bump. Pretty standard stuff, as CNBC explained.
Right. Now for the really interesting part. Crypto curiosities. Vanguard.
Yes, this is great. Bloomberg highlights this. Vanguard, famously skeptical about crypto, very conservative.
Right, index fund giant.
They've become the biggest backer of Strategy. That's the company formerly known as MicroStrategy.
MicroStrategy, the company that basically bet the farm on Bitcoin.
The very same. Reinvented itself as a proxy for Bitcoin. Vanguard is now their biggest backer.
That's an ironic twist, as Bloomberg put it. How on earth did that happen? Vanguard and a Bitcoin proxy.
It's all down to Vanguard's massive index fund business. Strategy, or MicroStrategy, holds so much Bitcoin on its balance sheet, it became a significant part of certain broad market indexes.
So Vanguard's index funds, just tracking the index.
Were compelled to buy shares of Strategy to maintain their tracking accuracy. They had to own it.
Wow. So crypto exposure is creeping into traditional indexes, maybe without investors even realizing it.
Exactly. Through their seemingly conservative index funds, it's like the old guard getting dragged into the new crypto world, almost against their will. Fascinating dynamic.
Truly fascinating. Okay, and a final quick note on oil prices today.
Yeah, Brent crude dipped for a second session. Like we said, traders doubted that Trump tariff threat on Russia's buyers would bite immediately given the 50-day window.
But prices didn't collapse.
No, strong refinery activity in China, the world's biggest oil importer, provided some underlying support. Kept prices from falling too sharply, as Bloomberg noted.
What a dive into today's financial landscape. Seriously, from market moves and fiscal stress in Asia and Europe.
To that whole interplay of tech, tariffs, inflation, then zooming into specific companies like NVIDIA, Tesla, Oracle.
And even the weird world of crypto via Vanguard. We covered a lot of ground.
Our goal is always just to help you cut through that information overload, connect those dots, and the breadth of these headlines really shows how interconnected everything is.
Absolutely. And how quickly narratives can shift. A policy announcement here, a tech breakthrough there.
Constantly changing.
So what stands out to you about how these market narratives can pivot so fast? Often driven by politics or tech that seemed like sci-fi just years ago. Something to think about.
Definitely food for thought.
Thank you for joining us for this deep dive, everyone. And we'll see you all tomorrow morning with new headlines from major financial magazines.